Welcome back. Did you know that over the next 30 years, baby boomers are expected to pass down an astonishing £5.5 trillion in assets? It's being called one of the largest movements of wealth in British history. So whether you're sitting on valuable assets or maybe hoping to receive some through an inheritance, are you ready for this great wealth transfer? Many millennials are facing tough financial challenges with lingering student loans, high rent or mortgage costs, and of course expensive childcare. So this wealth transfer could be transformative for some of them. But here's the catch. Without proper estate and financial planning, many families could face hefty tax bills. And from April next year, pensions will be included in estates for inheritance tax purposes, which could push that tax bill much higher. So how can families financially and personally prepare for this great wealth transfer?
I've seen it where children have inherited at 18, blown through it in like a year.
My dad originally said, in the will, I'll just leave everything to you and you can divvy it up 3 ways.
Oh,
and
wow.
I was like,
no pressure.
Absolutely not.
I always hear that it's like giving you agency and choice rather than having the government decide for you and step in.
Yes. I'm Philippa Lamb. If you have a moment, go and hit that subscribe button so you catch every episode as soon as it airs. Here with me for today's discussion, I have Niaz Azad. He's the co-founder of Millennial Money UK, an online platform that's reshaping the conversation around money for young people. Annaliese Barber's with us. She's a solicitor and director at Richard Reed Solicitors. She's also the head of Wills, Trust, Probate and Quarter Protection Department. That's a mouthful, Annaliese. With over 20 years of experience advising families about how to plan around wealth transfers. And from PensionBee this time, we're joined by Senior Performance Management Manager Dan Stean. He is in the middle of a house move right now, having been both a diligent saver and recipient of a lump sum gift in his 20s. I'm just going to start with the usual disclaimer. Please do remember anything discussed on the podcast shouldn't be regarded as financial advice or as legal advice, and when investing, your capital is at risk. Hello, everyone.
Hello.
So, Dan, as I said, you were fortunate enough to receive a bit of a windfall.
Yeah, very fortunate. So my grandmother passed away about 2 years ago, and in her will, I was one of the beneficiaries, and me and my siblings kind of knew for a while, so I was able to kind of actively plan a little bit. I didn't know the monetary amount, but I kind of gauged, so I was able to kind of divvy up into, okay, I'm going to invest this amount, I'm going to kind of treat myself with this amount and kind of just plan for it, which is very type A, but I know some people would probably get it and then, go off on holiday for 4 weeks or buy a car or something like that.
And did you stick to your plan?
I did stick to my plan. I had it all kind of typed out on my laptop, and my wife said to me, "Oh, what's that?" And I was like, "Oh, I'm just planning how to spend money I haven't got yet."
That's a nice way to spend an afternoon, right?
Yeah, exactly. She did raise an eyebrow.
What about you two? Have you inherited or been gifted money?
I did. I've received a small contribution to my very expensive year last year. So I managed to buy my first house and decided to get married within the same 2 months.
Okay, a big and lovely year.
Yeah, big and lovely and expensive year.
Yeah.
So,
did you know it was coming?
I didn't know how much, and I didn't know what or when, but I kind of knew that I might be gifted something. So it was harder. It was harder to plan for, because obviously it's a very privileged position to be in, and I'm very grateful. So I didn't want to push it either. But I don't know. It's not that my dad would have minded, but I sort of.
It would feel weird though, wouldn't it? You go, Dad, I know you're going to give me some money. How much is it going to be?
How much are you going to give me? So I can plan, right? And it actually did make it trickier planning for the year because I didn't know, even despite having been given a gift.
Yes. Annaliese?
It's a long time ago, but I had the choice of a wedding or a house deposit. So I took the wedding.
Why are you looking like that was a mistake?
I think good choice.
Should we rewind a few decades? Because we're talking about all this money, but Annaliese, where does all this money come from? How is it that baby boomers, and I should say, this is people born between about 45 and 1964.
Yeah.
How did they become the wealthiest generation we've yet seen?
So I think it's a combination of benefiting from historical timings. They've got the whole post-war recovery where Britain's sort of booming, as it were. You've got stable wages, you've got high job security, houses were affordable, and then you've got this huge surge in property values that benefited from that. Education. If you went into higher education, it was usually free or low
you
cost.
could get grants, couldn't you?
Yeah.
Not loans, grants. Imagine.
Yeah. You actually got paid for going to uni. Imagine that. But at the time, I guess less people went to university. Pensions, so more generous. They were defined benefit pensions, and they had a guaranteed income at the end. So I guess we would call it gold-plated pensions, really.
There's a whole load of pension millionaires from
Yeah.
that generation.
Yeah.
Yeah, I come across that all the time with clients. And also they benefited from the whole intergenerational wealth transfers as well. So there was a whole, I think it's historical timing and just being right place, right time, really.
I tell you what I always think. I always think for baby boomers who didn't benefit from all this, it must be really annoying being characterised as a super wealthy generation, because obviously some people have done astonishingly well, but there's going to be a whole bunch of people who really didn't. So we do need to kind of keep that in mind as well, don't we? The other thing I wonder about is how different things look from a millennial point of view.
Yeah, it's the other end of that spectrum, right? Because so I was the first year that had the increase in tuition fees for universities.
Were
so
you?
The 200% increase.
Wow.
So now, and so I've got people in my workplace who are on the same income as me, for example, and a few months older, and like they're so shocked by the difference in our take-home pay because
Really, really big.
It's really noticeable, and unless you're in that. I guess those few years you wouldn't really realise how different it actually is. So 200% increase in student loan tuition fees. We also came into the job market off the back of a global financial crisis.
2008 crash. Yeah.
So the scarring effects of all of that, and then obviously property prices were hugely inflated by the time we're in our wealth accumulation phase of our lives as well. So
and we haven't seen much accumulation on that since yet.
Exactly. So it's really different, and like you say, it's just a different set of circumstances and opportunities. I always like to be a bit more positive about it as well. It's a different set of opportunities.
The whole SWOT analysis.
Strengths, weaknesses, opportunities, threats. I mean, Dan, this is you too, right?
Yeah. I think seeing it as an opportunity is good, even in the last kind of 5-year period where markets have gone down, people will panic, but it is quite a good opportunity to then put some money in, whether it is like stocks and shares, ISAs, normal ISAs, or even your pension. If your pension does go down, people might panic, especially if you are towards retirement age. But some people my age, like 20s or 30s, where you can't access it, you might see it as an opportunity to put some money in and then hopefully reap the benefits of it in the future.
Well, yeah, it's interesting, isn't it, what this huge transfer of wealth is actually going to mean for the millennials as a generation.
Yeah, absolutely. I think it comes with like a change in values as well. So I think like there's a lot of agency that moves with money, right?
Yeah.
I remember having a conversation a couple of years ago about what it will mean for all this money and influence, because actually with money comes a lot of influence.
Sure.
And actually the numbers are, I think it's $100 trillion. I know in the UK it's 5.5 trillion, but globally it's seen as 100 trillion. I think that's because 86 is within the US.
At 100 trillion, just pause for a moment and think, I mean, that's a serious number even by global financial standards, isn't it?
Exactly. And I think intergenerationally there's a bit of like anxiety as well, because what will it mean for the world when all this money moves and you have a generation with a certain set of views and values potentially moving to another generation with a different set of like priorities and values as well. So
yeah, but largely in the same geographical area as well of the world. So it seems to me there's also going to be a widening gap, isn't there?
I've heard the term inheritocracy be used quite a lot. And historically, I guess like when I was sort of growing up, our parents and mentors told us to just go and get good jobs with high wages. And me and my friends, we've been privileged enough to like sort of achieve those jobs and jump through those hoops. But
you worked for it.
Of course, but you sort of haven't received the benefits that you were sold at the start of that journey. And funnily enough, now I guess like over 10 years into my career, I'm seeing people, friends that I know who have been able to be a lot more, I don't know if free is the word, with like career choices, because they're aware of inheritances that are
so they have expectations.
Right. Whereas historically it would have been you much more, or at least on the surface level, much more meritocratic, so that you work really hard to get a high income, to save money, to then have a good life.
Yeah.
Whereas now it's I kind of know that I'm coming into this money eventually, so it doesn't matter how much money I make now. It sort of really changes.
Yeah, you can
approach.
see how it could change aspiration as well, can't you?
Absolutely.
Changes the mindset, doesn't it?
Yeah, for sure.
Because Annaliese, you're all about advising people, for looking ahead. But this wealth, assuming people don't just blow it, is going to trickle down to subsequent generations as well, isn't it? So it's not just a now thing.
It's going to have a trickle down effect. I'd not heard of the term inheritocracy.
Yeah.
If I said that right, I thought it's really interesting, but I've seen it. I've seen it in practice at work when we've had sort of large trust funds that are going to children. So it might be that the firm I worked for, we managed trust funds, and I've seen it where children have inherited at 18, blown the lot.
Wow.
But then,
Have you really?
Wow.
absolutely, yeah, like blown through it in like a year. So there's this whole debate as to if you've got a trust fund, do you sort of prepare the child for it? There's always going to be this end date for it, or you could have what's called a discretionary trust, where it's kind of there's no end point to it, but it's that whole kind of weighing up, okay, do we give the child the money at 18, 21, 25, and then they can use it, buy property, whatever, or is it in a trust with no potential end date? It's kind of that balancing act.
We should start with the kind of nuts and bolts of this, because tax is the thought in my head. If we think about planning for this wealth transfer, Annaliese, this is your area. Inheritance tax, it's a big subject, but can you give us the basics?
My favourite quote when I'm talking to clients is Benjamin Franklin, where he basically says, there's two things in life are certain: death and taxes. I get clients coming into the office, and one thing they're really obsessed with is death duties. They still call it death duties, even though it's not been called death duties for many, many years.
Okay, yes, so just with once to doubt, that is the same thing.
It's the same thing, yeah. So it's actually introduced in 1694, according to my research.
Wow.
So it's not a new thing. And you had to pay it when your estate was over £20. So thankfully, the threshold's a bit higher now, but not much. Basically, what you need to know is that inheritance tax is a tax on an estate's person. Your estate is property, money, possession, and what we call potentially exempt transfers, which you make within 7 years of death. And you have to remember that not all estates are taxable. It's only if it's over 325,000.
Yeah, this is important to say, because obviously you don't pay inheritance tax until you inherit more than 325,000. That's right, isn't it?
So
But the rate is high, isn't it?
It is, so it's 40%. Anything
A
over
big
325. But there's lots of allowances are available. So quite often it can be that although on paper an estate looks like it might pay tax, once you've taken into account the nil rate band of 325,000 and you've got now the residence nil rate band of 175,000, it might be for most people actually it's not going to be an issue.
Is that in addition to the 3?
It is, yeah. But the thing is, so I guess what happened, it's 2017, so it was kind of the everybody focuses on the whole, it's £1 million, you can give £1 million away tax-free. But you've got to bear in mind that's where you've got a married couple or a couple who are in a civil partnership. So that's their 2 lots of 325, and that's 2 lots of 175 for the residence nil rate band. But on paper it can look like, oh great, yeah, I've got £1 million tax free, but you've got to remember the money, the residence nil rate band can only be used against property, so you have to have a property that's worth at least 350,000.
Well, and that brings us to the key point, doesn't it? Because anyone take a guess at the average UK property price now?
It's under 300.
Yes.
Yeah. Is it? Oh.
Yeah, Dan nails it. In January I think it was £270,000. Numbers vary, but somewhere between that and £300,000.
Yeah.
So that's the average for the whole country. You're nearly at that point where you're paying inheritance tax already, aren't you? So it used to be. Well, I suppose my sense was that only people with big estates paid inheritance tax, but not anymore.
Yeah.
So the band, it feels quite low.
It is. I mean, until 2009 tax year actually used to increase each year. So in April it would go up. So it's been frozen since the 2009-2010 tax year at 325,000, and it will stay at that level until 2030, 2031. So it's like 22 years, which...
22 years with all the inflation that we'll
Yeah.
see in 22 years.
Mhm.
That's amazing, isn't it? So, I mean, that's so far, far more people are going to be caught by
Oh,
inheritance tax than they
absolutely.
ever used to be.
Yes.
What should the number be?
So it should be more like 535,000, which is a huge difference.
It is, isn't it? Because if we're saying that the average house price is under 300, then that gives you quite a lot of wriggle room with your
Yeah.
estate, doesn't it? For other
Yeah.
investments and savings and belongings and all the rest of it to be part of your estate before you would have to pay an inheritance tax.
And I think it's something that sneaks up on people as well. They don't appreciate how much their property's worth.
Hi, it's me, Philippa, just interrupting for a moment to say a big thanks to all of you who've subscribed to the Pension Confident podcast. Our mission is to help you feel more financially confident, and we are thrilled with the community we're growing here on YouTube. If you haven't already done it, hit that subscribe button right underneath this video so you never miss an episode. Meantime, enjoy the rest of this month's conversation. So, Dan, I mentioned at the top that, what counts towards your estate at the moment, pensions don't. But from April next year, they will.
Yeah.
So talk us through that. How's that going to work?
It will mean it'll be very big, actually. So people's biggest financial kind of assets are their house and their pension. So that is most likely going to tip people over that 325,000. And I imagine there's going to be a lot of big inheritance tax bills because some people's pensions might be worth that already. So combining that with their property value as well as other assets is going to be quite a big deal, so people probably do need to kind of plan and have conversations and get ready for April 2027.
And talking of things that people like to kick down the road, Annaliese, wills.
Oh,
Because it's important to have one, particularly in this context. I mean, obviously,
absolutely.
generally it's important to have one, but
Yes.
because things can get really complicated if you don't. Right?
can be. So I think, it's rare that I get younger. I'm sorry. I feel so old.
I'll
Do you have a
younger.
will?
Look at Dan.
Look at it. I feel so old. Do you have a will? I'm putting you on the spot there.
I don't have a will yet. I'll caveat and say
And
yet.
you bought a property and you don't have a will.
Yeah, so we're
We're all shocked around the table. I'm not
we're in the
gonna lie.
process of upsizing, but we've kind of said, my wife and I, that once we've bought the place and once we have had kids, which hopefully will be the next 1 to 2
there's
years.
so many
Okay.
times.
Yeah.
People not
We'll
watching
do
this on
it.
YouTube, Annaliese is literally clutching her head. Yeah. Tell them why that's a bad idea,
Oh my
Annaliese.
goodness! Oh, the amount of times I hear that, it's kind of I'll get people coming in the office saying, "Oh, we've been meaning to make a will since we had the kids," and you'll say, "Oh, how old are the kids?" 30. Okay, right. I think I've been in practice quite a long time now, which makes me feel terribly old. I guess in my early days of doing the work I do, it was like families were very typical. You had mum, dad, kids, whereas now you're on to kind of remarriages or people who've been together an awfully long time and have children.
Or
and
people not married with kids.
yeah,
Lots of people not
exactly.
married,
And
yeah.
it's just the potential for things to go wrong is just so huge. And I think people think wills are expensive, but I think they're of course I think they're a good thing to have, but it's, if you make a will, you're deciding what happens to what you've got. It's important to have a will just to make sure, well, from a tax planning point of view, because it might be there's things you can do in your will to structure stuff to be more tax effective. It can be there's reasons you want to exclude people in your will, for example. It could be you want to put trusts in your will because it might be you have children who have a disability and you want to make sure that they're provided for, but you can't give money to them directly.
I always hear that it's like giving you agency and choice rather than having the government decide for you and step in and look after your
Same
estate.
testacy can be really unfair.
I've been sitting here quietly and letting you take the heat, but I've been meaning to.
You're kidding me.
You don't have one either.
I've
Oh
been
my
meaning to.
goodness.
I've been
That makes me
meaning
feel
to have my
better.
will written for the
Okay,
last.
Annaliese, something really smart,
80
because I've had a will since my 20s.
Excellent.
I'm meaning to.
You're
That
really...
makes me feel better.
I can't believe you
Annaliese,
haven't
maybe I'll
done
come
that.
to you straight afterwards.
I'll give you a card.
So, because Your dad didn't have one for a long time, did he?
My dad didn't have a will for ages, and it wasn't until my mum passed in 2021 where I said, "Oh, what's the situation with yours?" He was like, "I don't have one." And my dad's very laid back. He's so laid back. He's basic diagonal, and we kind of sat down and said, "Okay, well, your house is near the kind of the threshold. We need to plan for it because in a X amount of years it might go over, so we need to have something written down." And I've got 2 older siblings, and my dad originally said, "Oh, in the will, I'll just leave everything to you and you can divvy it up 3 ways."
Oh,
and
wow.
I was like,
no pressure.
absolutely not. So that is not what happened. And we're all in that, and it's literally just his kind of house, which he said, "Oh, once I've gone to sell the house and split it 3 ways, there's no kind of massive antiques or paintings or anything like that."
If you don't, so my mum also passed in 2021, and I remember they just got. My parents came and told me that they just got their wills done a few years before, and that sort of like sprung it to mind at the time, because I think it meant that my mum's portion that you mentioned earlier and her allowances were passed to my dad, and it kind of saved, because it was fairly premature in terms of my mum's passing, but it sort of forces you to realise that you can never be too prepared.
So, okay, so need to knows a will, because it's a good idea, right? And also, getting back to this, transfer of will, it means you can plan, right, Annaliese?
Absolutely. So, I mean, the thing is with a will, it's, again, as you were saying, agency, tax planning, clarity, because I think when people are second guessing and things like that, a will makes it absolutely crystal clear this is what you want. Even if you make a straightforward will and you're just leaving everything to your partner or to the children or whatever, it just makes it. A simple will can create clarity. A will can be as easy or as difficult as you want to make it. Most clients will come in and they've got the weight of the world on their shoulders, and they've put off making a will because they think that their family setup is complicated or their finances are complicated or whatever. But actually, when you sit and unpick it, a lot of the time it's really quite straightforward. It just needs somebody on the outside going, actually, it's not that bad, we can deal with this.
There's a kind of emotional resistance to people making
totally.
wills. So we talked about wills. What we haven't really talked about is gifts in life when people are still alive. So, Annaliese, how can parents just give money to their kids?
You can do whatever you want. You could, if you want to give it to the kids or whatever, that's absolutely fine. But you've got to remember that potentially it can come back and haunt you a little bit. So you've got your annual allowance of £3,000 per year, and then you've got gifts of £250 that you can give to people not part of the people that you gave your £3,000 to. Anything over that you need to keep a record of, because if you survive for 7 years after making a larger gift, it will drop out of your estate from an IHT point of view.
So you can hand over a really seriously large sum of money, and as long as you survive for 7 years,
and there's no
tax liability
and no strings attached to it as well. So it's got to be a true gift. So it can't just be a gift on the surface. It's got to be a true gift. So it's kind of, here you go, here's 50 grand. See you later.
So you can't give your kids the house and say, but I want to live in it until I die.
Yeah, so that's what we call a gift with reservation of benefit. So it's a gift on the surface, but it's not really. So that can come back into your estate. Another thing that can catch people out as well is that if you give children a deposit for the house, or you then go and live with them, it can come back as a gift with reservation of benefit, because it was a gift to start with, but now you're benefiting from it because you're living in the house.
Who knew?
So that's a little quirky one that can catch people out.
Yeah, I mean, we're talking about parents, but are there other rules around things like uncles, aunts, godparents? I mean, can anyone pass down money?
Yeah. For children, you can give up to £5,000. £2,500 is if it's a grandchild or a great grandchild, and £1,000 to any other person. So that's your exemptions. But if you wanted to give a larger sum of money to people, that's absolutely fine. You just got to make sure you survive the 7 years.
I can see how, I'm not really in this position, but I can see how handy over like a big sum of money, and then thinking, well, okay, it's gone now. Well, what if I live another 20, 30 years? What if I need the money?
Yeah,
is there a way around the 7 years? Is there any workaround, or is that
no.
That's it.
Well, you get some relief. So if you survive for 3 years after making the gift, then there is some inheritance tax relief. And
there's a taper, isn't there?
So the closer you get to 7 years, the greater the relief is.
So I think what we're getting from this is take advice.
Absolutely.
Don't guess, don't wing it, because and it doesn't necessarily need to be expensive, does it?
No.
I mean, also good advice on online, reputable advice online. If you don't want to pay someone immediately to get advice, but you don't want to just guess, do you, Annaliese?
No.
I tell you what, I'm also wondering about this wealth transfer. I mean, it all sounds great, doesn't it? But I am wondering how it's going to affect family relationships, because there is nothing that disrupts goodwill in families like money, is there? We all know it's sad but true. And how it's shared out is going to be a whole thing, isn't it, Annaliese? I mean, I bet you've come across situations with clients where there's been a lot of strife.
So it can be if child's received money in their lifetime, then the parents might do something in their wills to kind of try and level things out because they want to be fair. Or like there can be uncomfortable situations where people have gifted property and then people fall out, and it's kind of, I've given them my property, I'm still living in it, but things are really uncomfortable now because we're not speaking.
But there's a question, isn't there, about how you divide up. I mean, if you've got a bunch of kids, we're talking about parents and kids, and the kids are grown up, and some of them are earning more than others, or maybe some of them are married partners who are earning more than others. And as time goes on, we've all seen this, like you get this gap growing up between siblings. There, the ones who are, really very comfortable, and maybe the ones who've gone into jobs that aren't high paying but are rewarding in other ways. There's a big gap there. So should parents means test it, if I put it in that way, when it comes to passing down money? I mean, if you've got really wealthy child, do they need your money as much as someone working, I don't know, in the NHS on a lower salary? I mean, what do we think?
The value that I can add as a solicitor is we're on the outside looking in, so we can remove the emotion out of it. Most of the time clients will go, right, okay, we'll just do an equal division, and it might be the child themselves has removed themselves out of it, going, do you know what, actually I'm doing okay, leave me out of it. Or it might be they say skip me, because if I get anything from you, it's actually going to cause me an inheritance tax issue. So generation skip and go to my children instead. So there's no one size fits all.
Because certainly as people get older with a bunch of kids, there's usually one who's sorting out the elder care, isn't there? There's usually one who's kind of Dad's his hand, I mean, I've done this too, and that can be a lot of work and expense, can't it? And you kind of think, well, in fairness terms, they should probably, that can be years and years of input, can't it?
Yeah, so my siblings, they're both older than me, so they're in their like early to mid 40s and I'm in my late 20s. And I've kind of always been interested in like finance and like learning how to like make your money work for you, whereas they haven't been as interested. So I kind of said to them both, I'm going to set Dad's will up. Like I've taught them through it, so they kind of know it's not going to be a case of like, it's only just me in it.
Yeah.
So
there's no surprises.
Yeah, so they kind of know what's happening. But I think sometimes there are like siblings that will take a lead on it, and sometimes you might have people that will be more involved and it is split.
And you always feel like the old grievances pop up, as we were saying earlier, like when someone's not here to sort of like hold everyone at bay, you see the grievances pop up again, and you wonder like, where has this come from? And sort of the inheritance becomes like the means to fight over all of that.
Oh,
yeah. So this doesn't sound very positive, but should we wrap up?
Which is why you should make a will.
There is that. Well, I was going to say, should we wrap this up by things listeners could maybe think about doing right now? What would be useful steps for them to take?
I think making the will, which I'm going to be speaking to Annaliese about. And then I think the other thing is to try and step beyond the awkwardness of certain conversations. As you said at the start, Annaliese, death and taxes are the two things that you can't avoid. So I think to get comfortable as quickly as possible to have conversations about these things will probably help for longer term financial and estate planning.
So if you're siblings and you know there's money in the family, even if it's not a huge amount, maybe that's the thing, be bold enough to start the conversation.
Yeah, probably the first step's the trickiest, but I think one thing that I've taken is you can have a will at any age, and it's very important.
Excellent. I think what I would say is that you need to plan actively, otherwise you can risk sort of accidental disinheritance of family members, stepchildren and things like that. So I would say that the takeaway would be to talk early, plan clearly, structure wisely, and review regularly.
Yeah, and it doesn't have to be one conversation, does it? Because I think people dread it because they think it's going to be like everyone sitting around the table staring at each other. There's going to be this one conversation where it's like make or break, and we agree. But actually, it's a series of conversations.
It can be a drip, kind of plant the idea and then go back to it.
That's a whole other conversation.
Yeah.
I think we're about there. Thank you very much, everyone.